Hey, what's going on? So I want to explain balanced price ranges. This is an ICT concept. Now, I was actually in this buy right here. Excuse me. So I took a buy right here and I put on 3 positions and my target was up here. Okay, but I should have put it at consequent encroachment of this wick. So I put on 3 positions. I sold 2 of them up here. If you see the time, it says Wednesday at 9:15. This is New York Open. And I saw price reversing. So I had longs on here. So I sold 2 of them up here. And I still had one because I want to hold out for my terminus, which actually hit over here. So I'm about to show you why I held this one long position, even though I was in drawdown. Listen, it's something called a balanced price range. That's what BPR is right here, balanced price range. So the way it works is, this is important right here. Like, it's some ICT shit. Okay, so this is advanced concepts right here. So, like I said, I understand why somebody wouldn't study ICT. I mean, shit. You really have to have a love for this stuff and know that you really can do it. So this is a new week opening gap. Okay, this is Sunday. If you look down here, this is a new week opening gap, NWOG. So we had price go down. This is what a balanced price range is. When price goes down, a gap or area where price is just ranging. So the way it works is price has to go down. See, it went down in that shaded box right there. Then it went up in the shaded box, okay? And then it left it. So let me draw that real quick because this is how it works. This is a balanced price range. I'm about to tell you why I held my long, even though I was in hella drawdown. Because remember, I got in right here. I sold 2 positions, had 3 on, and then I held that one long position. I should have sold all 3 up here, but I had 1 on here. I'm about to show you why I held it. So again, this is a balanced price range. Let me lighten this up. So the balanced price range is when you have a gap, like this is a new week opening gap, right? Or you could just have candles just ranging. You could just have candles ranging like this, right? Or it could be an actual gap. But the way it works is once price leaves the price range, okay, like right here, candles may come into this gap and it may, come up, go down. I'm sorry, let me go back. Price may go up into this balanced price range, right? And then it may come up here, do its thing, and then it may go down and then do this. But then when it leaves it, it becomes a balanced price range because price went up into the gap and then it went down into the gap. Okay. It has to go up and down and then leave it. It becomes a balanced price range. Now, the whole point of me saying this is that 50% of this range is important. This is 50%. Okay. Look at this range right here. If I draw an imaginary box around here, let me make it a red box. This is a range right here. Remember, price is going up and down, up and down, up and down right here. So this becomes a balanced price range when price leaves it. You see how it left it? Now, the whole point, the 50% of this range is important because when price comes back up, when price tries to come back up right here, right? If it breaches 50% of this range, then that means that it wants to go higher. So it's going to retrace down and then go higher. Okay. That's the whole point of this and the same thing right here. I know this may be a little confusing. Let me try to delete some of this. Hold on. So let me delete this and then I'll show you the same example with the other one. Just let me delete some of the drawings. Let me just press back. Okay, so again, this is a gap right here. Now, if price comes up into this gap, comes up here, does this little thing, go down, but then when it goes below and then comes back up into this gap, then leaves it, this is a balanced price range. It has to go up into the gap, or it could be a channel of candles. Like I was saying, like this could be considered a balanced price range. It's not just gaps. See, I thought it just was gaps, but it's also candle ranges as well. But the whole point of this is 50% is important. So if price comes back above this, then it's going to retrace down and go higher. So it's important to see the balanced price ranges in the chart. Now I'm about to show you where the balanced price range was at. Okay, there's some ICT shit. Like, The dude's concept is next level. I mean, it's just that's a fact. Uh, okay, so listen. So right here, remember we have the same thing I just told you about. We got a gap right here. Price went down, right? And now I'm looking for price. See, when price goes down, you can't just delete the gap thinking that it's done. Price hasn't went up. It has to go up inside the candle as well. I mean, the range. So it went up into this range, retested, then it left it. You see that? Price left it, and now it becomes a balanced price range. So basically, if price comes back below 50% of this range right here, then that means price wants to go lower right now. Now, eventually it did go lower, right? But it broke this balanced price range, and you see how it went below and now retraced up. Couldn't take out the high. Now price is destined to go lower. This is what I'm thinking. I think price actually wants to come down here, and I'll do a before and after video next weekend as well, which I'll be in a very, very great space. So I see price coming down here, but that's neither here nor there. The whole point is this is a balanced price range, and this is the 50% line right here. So when I seen price push down like this, I still held my longs because I'm like, if price touches this line and goes lower, I'm getting out. That don't mean that price is going to just go lower at the moment. It would have spiked up a little bit and then it would have went lower. That let me know like, hey, I need to get out. So this balanced price range and ICT concept saved me because remember I had a long on. So price eventually couldn't hit the balanced price range down here to 50%. And then it came up here and took this high and I held it all the way up to up here and I made even more money because remember I got out my I was in on 3 positions. I got out on 2 positions here, but I held one. These are 3 longs. I sold 2 longs. I had a long I was in hella drawdown. I was freaking out. But then price came up all the way up here and I sold, so I made even more money here off of that position. Why? Because of the balanced price range theory from ICT. Also, let me show you one more thing and I'll let you go. I want to show you about the bearish divergence, bullish divergence as well on RSI. I just started using RSI. You can go back to videos a year ago. I don't use indicators, but I like this right here because it shows you divergence. I don't have to look at all 3 charts. I don't have to do SMT divergence, which ICT talk about. Now look at this. As price was going down, price was going up. This is bullish divergence. This is a relative strength indicator. So this told you that you could take a buy and it kind of made sense because it couldn't take the balanced price range. So I should have put on another long position here, especially when I seen this candle close above this one like that. This is a special kind of engulfing candle. You see how this white candle right here, see how it closed above? It took the whole body. It closed above the body, it closed above the opening price and the high of that candle. So that was dead giveaway and went to go higher as well. All right, thanks for watching.